Ever feel like um, you need like a secret decoder ring or something to really get what's going on in ESG investing these days?
Yeah, tell me about it.
Especially when you see a fund and the name is promising, like the Green Moon or something.
Mm.
But then you look at what they're actually invested in, and you're like, this looks kind of sus.
It's like when you think you're buying organic apples and then you find out they were grown right next to a pesticide factory, you know?
Exactly. And that's exactly what we're diving into today.
Yeah,
It's all about transparency. Transparency is key.
it is. Yeah.
And luckily, some new guidelines from ESMA are all about bringing that transparency to the forefront.
Yes.
So we're diving into ESMA's guidelines on funds names using ESG or sustainability-related terms.
Okay. Kind of mouthful.
But bear with us. It's a really important one because it impacts you directly as an investor.
It really does.
This is all about setting the record straight on what those ESG labels on funds actually mean.
Yeah, about time. I mean, for too long, this whole ESG space, it's been like the Wild West of investing, right?
Right.
These guidelines are here to bring some much-needed law and order.
Yes.
Making sure that when you see ESG or sustainable on a fund, it actually means something.
Yes. Like, actually aligns with those terms.
Exactly.
No more of this greenwashing stuff.
Exactly.
And this is big. New funds, they got to comply immediately.
Yeah.
Existing funds, they have 6 months to get their act together.
Okay, right.
And at the heart of it all is something called the 80% rule.
The 80% rule. Okay,
Yeah.
This is where it gets interesting, right? For you as an investor, what this means is that if a fund is using terms like environmental or impact in its name, a full 80% of its investments need to back that up.
Yes.
No more greenwashing.
Exactly.
It has to be the real deal.
So your investments, what they're actually invested in, has to genuinely reflect the name of the fund.
Exactly.
And it's not just about, ticking boxes on a checklist.
Yeah.
These investments, they need to meet very specific criteria,
Right.
which are outlined in the guidelines.
Yeah.
And we'll get into all of the nitty-gritty details of that in a little bit.
Okay.
But I think the important thing to emphasize here is that ESMA, they really got granular. Like, they went deep
Yes.
and drew these distinctions between all these different ESG terms.
Oh, yeah, for sure. Like, for example, environmental, right?
Yeah.
That has different criteria than sustainability, which is even stricter.
Right.
And then there's impact, there's transition. Like,
It's like they said, hold on, not all ESG terms are created equal here, people. Let's add some nuance.
yeah,
And this is crucial, right? Because it means funds can't just slap like a vague ESG label on anything anymore.
right.
They need to be specific. They
Exactly.
need to be transparent about what they're actually doing with your money.
Absolutely. And that's what it comes down to, empowering investors like you to make informed decisions that actually align with your values.
Yes. And speaking of, let's talk about a question that might be on your mind.
Yeah.
So what if a fund follows a specific index, like let's say it's called the, Climate Action Index or something?
Yeah.
Do these rules still apply?
Absolutely, they still apply. It doesn't matter if they're tracking the coolest sounding index out there.
Okay.
What matters is what they're doing with your investments.
So they can't just ride the coattails of an index's name.
Exactly. If that index happens to be, focused on sustainability, great, but their own investments need to stand up to the same level of scrutiny.
Okay. So let's say a fund wants to use the term sustainable in its name.
Yeah.
What's the deal there?
Well, sustainable is like the gold standard, right? And ESMA knows that.
Right.
So not only do those funds need to meet that 80% rule, but those investments, they need to be truly impactful. They actually need to be contributing to a more sustainable future in a real measurable way. This is about action, not just words.
Got it. So it's not enough to just kind of be doing good things. They have to really be walking the walk.
Exactly.
Yeah.
Exactly.
Okay. And this isn't a set it and forget it kind of situation.
Right.
ESMA expects ongoing monitoring, ongoing adjustments. Right?
Yeah, absolutely. And you know what? You can do the same thing. The guidelines really emphasize transparency, which means these funds need to disclose exactly how they're complying. This is huge. It means you have more power now than ever to hold those funds accountable and make sure your money is actually making a difference.
Yes. And we'll be diving deeper into those disclosure requirements.
Oh, yeah.
And what to look for
Right.
in part 2 of this deep dive. But first, let's unpack those different ESG terms that ESMA has outlined. Because knowing what they really mean is the first step to seeing through the greenwashing.
It's kind of like they went through like a dictionary or something of all the ESG buzzwords. And they're like, hold on, let's add some nuance here,
Yeah.
Like they're really drawing lines in the sand.
Yeah.
Especially when it comes to these terms like environmental versus sustainable, right?
And that's important, right? Because sustainable should mean something more than just being eco-friendly. Or,
Yeah, right.
and these guidelines reflect that, which is great.
Absolutely. Remember how we were talking about those sustainable funds needing to make what they call meaningful investments?
Right.
Well, ESMA didn't just leave that open to interpretation.
Right.
They actually specifically reference Article 217 of the SFDR.
Okay, time for a little decoder ring moment here, folks.
Yeah,
SFDR stands for the Sustainable Finance Disclosure Regulation.
there it is.
All about transparency in sustainable investing. But what's this Article 217?
Yeah, so Article 217, this is like the heart of it. It basically defines sustainable investments as those that contribute to a positive environmental or social impact,
Okay.
while also avoiding harm to any of those objectives. So you can't just like do some good. You need to avoid doing bad at the same time.
That's like that whole do no harm thing, but for investing.
Exactly. Okay.
So give me an example.
Right.
Let's say there's a fund. It's called the Sustainable Future Fund or something like that.
Right.
They can't just have like 80% of their assets in companies that are, like dabbling in green tech or whatever. They actually need to show how those investments are holistically contributing to a better future, like across environmental, social, and governance factors.
Precisely. All of the above.
Okay, I'm picking up what you're putting down.
Yeah. And this level of scrutiny, it extends to those transition and impact funds, too.
Right, because those are kind of their own category, right?
Yeah. They can't just talk the talk. They need to have a solid plan to walk the walk.
Okay, so let's break those down a little bit because there's some homework assignments here.
Yeah.
So a fund that's called, let's say, the Transition to a Green Economy Fund or something like that.
Right.
They can't just invest in any company that claims to be going green.
Right.
They need to prove they have an actual strategy.
Exactly. So, like, a clear and measurable path towards that transition.
Okay.
So think, detailed plans with specific targets, timelines, evidence that they're actually making progress.
But it's one thing to say we're going to get there.
Mm-hmm.
It's another thing to actually have a roadmap.
Exactly. It's about accountability, right?
A roadmap's a good way to put it.
Yeah.
Not just a vague sense of direction.
Exactly. And the same goes for those impact funds, too.
Okay.
If you're calling your fund the, positive impact fund or something, you better be ready to back it up with some serious data.
Okay.
Think quantifiable metrics, robust impact reporting, the works.
So, receipts?
Basically.
Yeah.
And this is where it gets really, really interesting for you as an investor.
Okay.
Because all of this transparency, it means you have the power to actually see if a fund is actually living up to its name.
You heard it here first, folks.
Like, for real.
Don't be afraid to dig into those fund documents.
Please. Yeah.
Look for impact reports.
Yeah.
See how they're measuring their progress.
Exactly.
Knowledge is power.
100%. It's like anything else, right? You wouldn't buy a car without, looking under the hood, right?
Right. You'd want to kick the tires, read the fine print.
Exactly.
Make sure it aligns with what you're looking for.
Right. And remember, this is an ongoing process. ESMA expects ongoing monitoring and adjustments. So, don't be afraid to reach out to your financial advisor, ask those tough questions, and hold these funds accountable.
So it sounds like there's actually some teeth to these guidelines. It's not just like a suggestion box.
Right. That's where the national regulators come in. So ESMA is essentially handing them the rule book, right, and saying, okay, now you got to make sure everyone's playing by the rules.
Okay. So there are watchdogs in place to make sure that this isn't just a paper tiger.
Exactly. They have the power to actually investigate discrepancies, address non-compliance. Now, how effectively each country does that?
No, that's a whole other can of worms.
That's a whole other deep dive.
Yes, episode 2, part 2. But the point is, these guidelines have teeth.
Yes.
This is not just like a suggestion box.
Absolutely. And more importantly, I think it's a sign that, ESG investing is growing up. This is not some niche market anymore. It's becoming the mainstream.
Yeah.
And with that comes greater scrutiny, greater accountability.
Which ultimately is a good thing, right?
It is. It's a win-win because it means more transparency. It means more responsible investments.
Right.
And hopefully a more sustainable future for all of us.
And that's what it's all about.
Yeah.
So we've gone over a lot here. The 80% rule, the national regulators, all of that good stuff. But let's get down to it.
Yeah.
What does this actually mean for you as an investor listening to this?
Well, it means you're in the driver's seat now, right? You have the information to make informed decisions.
Right.
And you have the information to hold those funds accountable, like for real.
It's not enough to just see ESG on a label or sustainable on a fund's name anymore.
Right.
You got to look under the hood.
You got to ask the tough questions. Think of it like, you're buying a house.
Right.
You wouldn't just look at the photos online and be like, okay, I'm ready to sign.
Right. You got to go to the open house, get a feel for it.
Exactly. You got to go see it in person, get a feel for the neighborhood, talk to the neighbors, right?
Right. You got to know what you're getting into,
Yeah.
basically.
Yeah. So what are some questions that investors should be asking when they're looking at these ESG funds now with these guidelines in mind?
Give us the top hits.
Number one, how exactly does this fund define and measure its ESG impact?
Okay.
Don't be afraid to get granular here. Ask them for concrete examples of their investment process, their engagement strategy, how they actually track their progress.
So really looking beyond, the marketing jargon, the buzzwords, all of it.
Receipts. Show me the receipts.
Yes. Okay. What else?
And then I think equally important is, how does this fund actually align with my personal values and investment goals?
Right.
Because remember, ESG investing, it's not one size fits all, right?
True.
What matters to you, whether it's climate action, social justice, ethical governance,
Yeah, your money.
it should be reflected in those investments.
And that's where those disclosures that we keep talking about, that's where those come in.
Yes.
You got to actually take the time to read through those,
Please do it.
even if it's a little dry,
It's important.
Look for red flags like
Yeah.
vague language, lack of measurable targets.
Right.
See if there are any discrepancies between what they say their values are and what they're actually invested in.
Exactly.
And don't be afraid to reach out to the fund manager directly if you have any questions.
Yes. 100%. If they're really committed to transparency, they're going to want to talk to you.
Exactly.
Yeah.
It's your money, it's your investment, it's your future.
It is.
You have all the power now.
Yes.
Demand that transparency and make sure your capital is going towards the causes you care about.
100%. And remember, this is a conversation, right? This is
Right.
not over.
Yeah.
These guidelines are a big step forward.
Huge step.
But the ESG landscape is always changing, right?
Right.
So, stay informed, stay engaged, keep asking those questions.
Keep them on their toes.
Yeah.
Well, there you have it, your crash course on navigating the world of ESG fund names with ESMA's new guidelines. Knowledge is power, and in the world of sustainable investing, you are now in control.